Hey everyone! Welcome back to the channel, where we break down financial wisdom, investing strategies, and personal finance tips to help you achieve financial freedom. I'm your host from Money Tailors, and today, we're diving into one of the most respected investing books of all time, The Intelligent Investor by Benjamin Graham, with commentary by Jason Zweig. This book, originally published in 1949, is considered the Bible of investing by none other than Warren Buffett, who famously calls it the best book on investing ever written. Whether you're a seasoned investor or just starting out, the principles in this book are timeless and highly practical. In this video, I'll give you a quick summary of the key concepts, followed by 5 essential lessons you can apply today to grow your wealth and move closer to financial freedom. So, if you're serious about building long-term wealth, stick around till the end. And if you're new here, don't forget to hit that like button and subscribe for more content on mastering your money. Hit like and subscribe for more investing tips. Alright, let's jump in. The Intelligent Investor by Benjamin Graham is a comprehensive guide on value investing, a strategy focused on buying undervalued stocks and holding them for the long term. Graham was all about minimizing risk while maximizing returns, and he believed that a disciplined approach to investing would protect investors from costly mistakes. The book introduces the idea of Mr. Market, an allegory for the stock market as a moody business partner who offers you prices every day, sometimes irrationally high, sometimes absurdly low. Graham encourages investors to focus on intrinsic value, rather than getting swept up in market hype or panic. Jason Zweig's commentary brings these classic ideas into the modern era, adding insights and examples relevant to today's markets. Value investing is to minimize risk, maximize long-term returns. The overall theme of the book is that investing isn't about quick wins or speculation. It's about patience, discipline, and a solid understanding of the fundamentals. Now, let's dive into 5 of the most powerful lessons you can apply from The Intelligent Investor. Lesson 1. Investment versus speculation. Focus on long-term value. Lesson 1. Investment versus speculation. Graham emphasizes the difference between investing and speculating. An investor seeks long-term value by analyzing the fundamentals of a business, while a speculator tries to profit from short-term market movements, often driven by emotions or market trends. Speculators chase quick gains, but they often end up losing money in the long run because they're not focused on the intrinsic value of what they're buying. Remember to invest for value and don't speculate for quick profits. An intelligent investor, according to Graham, is someone who makes decisions based on careful analysis, aiming for safety of principle and an adequate return over time. Remember, investing is a marathon, not a sprint. Focus on companies with strong fundamentals, and ignore the short-term noise of the market. Lesson 2. The margin of safety. Always leave room for error. Lesson 2 is one of the most important concepts in the book, the margin of safety. This principle means that when you buy an investment, you should do so at a price that is significantly below its true value. This cushion protects you from mistakes, unforeseen risks, or changes in the market. Don't forget that margin of safety is protection from risk. Think of it like this: if you buy a stock for $50, but you believe its true value is $70, you've got a margin of safety. Even if the market dips, you're less likely to lose money because you bought in at a lower price. The margin of safety is all about being conservative in your investments and never overpaying. By doing this, you reduce the chances of permanent loss. Lesson 3. Mr. Market, don't let emotions dictate your decisions. Lesson 3 is one of the most memorable parts of the book. Mr. Market. Graham uses the character of Mr. Market to represent the irrational nature of the stock market. One day, Mr. Market is overly optimistic, offering you high prices for your stocks, and the next day, he's depressed, offering you much lower prices. The key lesson here is that you shouldn't be swayed by Mr. Market's mood swings. The market's fluctuations are often driven by fear and greed, but as an intelligent investor, you must remain rational and not let emotions control your decisions. Stay calm when Mr. Market gets emotional. Graham advises investors to focus on the long-term value of their investments and not react to short-term market movements. If Mr. Market is offering you a price that's lower than the intrinsic value of the stock, consider it a buying opportunity. If he's offering you a price that's ridiculously high, maybe it's time to sell. Lesson 4. Know the difference between price and value. Price is what you pay, value is what you get. Lesson 4 is about understanding the difference between price and value. As Graham says, price is what you pay, value is what you get. The stock market sets the price of a stock, but that doesn't always reflect the actual value of the company. For example, during market bubbles, the price of a stock can be far higher than its intrinsic value, while in market crashes, the price may fall well below its true value. An intelligent investor recognizes this and looks beyond the market price to understand the real value of the investment. Think of price is not equal to value. Understand the difference. To be successful, focus on buying stocks that are undervalued, meaning the market price is below the company's true worth. This way, you're more likely to get a good deal and make a profit in the long run. Lesson 5. The power of discipline and patience, the key to long-term success. And finally, Lesson 5. The power of discipline and patience. One of Graham's core messages is that the most successful investors aren't necessarily the smartest, but the most disciplined and patient. The stock market will always have its ups and downs. There will be times when it feels like everyone is making money except you, or when you're tempted to sell in a panic during a market crash. But the intelligent investor sticks to their strategy, avoids emotional decisions, and waits patiently for their investments to grow over time. Always remember that success is a product of discipline and patience. Graham teaches that you don't need to constantly buy and sell to be successful. In fact, the more you trade, the more likely you are to make mistakes. Instead, stay calm, trust your analysis, and let time work in your favor. Patience is truly a superpower in the investing world. Alright, those are the 5 key lessons from The Intelligent Investor that can help you on your path to financial freedom. 1. Focus on long-term value, not speculation. 2. Always invest with a margin of safety. 3. Don't let Mr. Market's mood swings affect your decisions. 4. Understand the difference between price and value. 5. Stay disciplined and patient for long-term success. Which lesson resonated the most with you? Let me know in the comments below. And if you're serious about building your wealth through smart investing, be sure to check out The Intelligent Investor for even more insights. If you got value from today's video, make sure to hit that like button, it helps the channel grow. And if you haven't already, subscribe for more content on mastering your money, investing, and achieving financial freedom. Thanks for watching, and I'll see you in the next video.